Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Oil extends its slide as Iran and Oman push ahead with talks on a temporary shipping corridor through the Strait of Hormuz, easing fear of renewed disruption. The U.S. weighs fresh trade penalties against Canada after Ottawa announced dollar-for-dollar retaliation, raising the risk of an escalating tariff war between the two countries. And Nvidia reports after the bill, with investors focused on whether booming AI spending can sustain its rapid growth and whether rising memory costs will start to squeeze margins. It's just gone 8 a.m. across the Emirates. I'm Abir Awamad in Dubai. Let's start with the usual, taking a look at where risk assets are sitting at the top of the show. S&P future is not doing much. A positive session in the S&P 500 yesterday, but you know the deal. You know what we're waiting for. Jackson Hole tomorrow, and then Nvidia earnings later today in U.S. Trading, or after U.S. Trading hours. Of course, we're keeping an eye on the earnings, whether they will solidify the continuation of the AI rally. That is yet to be seen, but that is the big news of the week. And then, of course, the yields. We continue to talk about the yields. The 10-year notes, 4.64% this morning, so dropping from the highs that we saw last week and into yesterday's session. Of course, not doing much this morning, about a basis point higher. Jackson Hole will be a big determiner of whether the Fed will show some forward-looking guidance, but that remains to be seen yet again. And of course, Brent crude prices 3% lower this morning on the back of that news between Iran and Oman, that temporary corridor in the Strait of Hormuz. Now, more negotiations will happen to find a more permanent solution over the next 30 to 60 days. We'll talk more about that in the show. And we're keeping an eye on Bitcoin, still about $79,000, 1% higher. Ray Dalio saying buy gold, buy a little bit of Bitcoin, because we're probably headed into a debt crisis. So that is an asset that we've kept an eye on. And gold, look at where gold is trading, above $4,500, around $4,600 as of now, dropping slightly today, but still at elevated levels. Now, of course, for Asian markets, we need to get a check from Winnie Su, who is standing in Hong Kong for us. Winnie, what do you have for us this morning?
Yeah, good morning, Abir. Well, we are seeing Asian stocks rising for a second day as geopolitical tensions ease a bit. As you discussed, that discussion of a framework between Iran and Oman probably helping oil prices coming down quite a bit, and that is supporting the sentiment in Asian equities today. And of course, all eyes are on Nvidia, and we did see U.S. peers actually rising yesterday, with Nvidia also snapping 7 days of losses. So that perhaps also supporting the tech stocks here in Asia today, with the tech-heavy gauges here on the screen all up more than 1%. And worth noting that for the Taiwanese equity benchmark, we are just about 4% away from refreshing that all-time high. Now, flip the board, we also take a look at cross-asset, because it's still that impact from the lower oil prices that is helping to drive worries lower when it comes to inflation going forward, and yields here in Japan and New Zealand both falling, while a bit of an exception when it comes to Australian yields after we saw inflation print for July coming through hotter than expected, and that is raising the risk of potentially hikes to come in November. Hence, you are seeing the 3-year yield here up about 3 basis points, with the Australian dollar, the Aussie dollar, also strengthening to its strongest level in 3 months. Back to you, Abir.
Bloomberg's Winnie Su in Hong Kong, of course, with her usual market updates. Now back to our top story this morning. Oil is falling for a third day as Iran and Oman look to push diplomatic efforts to resume shipping through the Strait of Hormuz. And for more on this developing story, yet again, we're now joined by Onur Ant, Bloomberg's managing editor for the Middle East and North Africa. Onur, good morning. Good to have you on. We have a breakthrough, or something that resembles a breakthrough between Oman and Iran, although this is a temporary solution. What more do we know about this mechanism that they've discussed and that joint statement that came out?
No, I do agree with you. It is a breakthrough, although a small one. We were under the impression that both Iran and Oman were discussing how to reach a new regime to govern the passage of ships through Hormuz once traffic resumes for the past couple of months. But in the meantime, they did announce that they are also discussing this new joint maritime corridor that can serve as an interim passage area for ships to resume traffic, although the agreement has not been finalized yet. So if it does happen, obviously it would provide a huge relief for global oil markets, and we're seeing signs of that relief in Brent futures, with oil trading at about $87 this morning. So on the one hand, yes, this is surprising. On the other hand, there are a few questions remaining. It's hard to imagine how Iran would allow shipping through Hormuz without the U.S. also offering some relief from its naval blockade of the Islamic Republic. We haven't heard anything about that yet. And secondly, obviously, the large question remains, and that is the fact that Iran is not willing to agree to a permanent deal over maritime shipping through Hormuz without the U.S. meets its long-term demands, the long list of demands that we've spoken extensively about, and this agreement or this discussion between Oman and Iran has nothing to do about that longer-term peace deal.
And Honor, just briefly about that thing that was mentioned in the joint statement about other Gulf countries being included in the discussions, or alluding to the participation of other Gulf countries. What do you think the reaction is going to be to some of the clauses that were laid out, including the management of either Iran or Oman, or jointly Iran and Oman, over the Strait of Hormuz?
Well, Gulf countries have publicly said that they are against any deal that would allow any country to basically influence the maritime shipping through Hormuz in any future agreement. So the fact that Persian Gulf countries will be included in negotiations going forward seems that there is some flexibility on the side of Oman and Iran, possibly among some of those key issues that have prevented them from agreeing to something they can both agree to, both the Gulf countries and Iran. So it's definitely a step in the right direction. But I can imagine how exactly they could all be on the same side while their starting points are so wildly different. So we'll have to see.
Onur, thank you, of course, as always. Onur Ant, Bloomberg's managing editor for the Middle East and North Africa. Now, moving on with the story, Pakistan has been one of the main intermediaries between Washington and Tehran during the conflict, with the nation's army chief the latest to visit the Islamic Republic as part of efforts to ease tensions. Now, for some insight into the regional relationships, I'm now joined by Jamil Khan. He is adjunct professor of international relations at Karachi University and former Pakistani ambassador to the UAE and also Libya. Ambassador, good to have you with us this morning, especially at a time where we just heard that the army chief had visited the Islamic Republic, had said that we have some fruitful conclusions that may come out soon. What do you think of Pakistan's role over the past few months or so, and how further can it carry those diplomatic efforts between the U.S. and Iran?
Thank you very much for having me on your show. Yes, Pakistan, in fact, not only the mediation, it is really trying its hard that things should cool down. And right from the very beginning, it was as a result of Pakistan in collaboration with its friendly countries in the Gulf area and others, they were able to really reach to a level where this 14-point MOU was really evolved. And that is the roadmap now right in front of us. Now, the CDF, our Chief of Defense Staff, Field Marshal Saeed Asim Munir, he had to really take an urgent visit. It was his fourth visit to Iran. And some of the positive signals we started receiving soon, not only soon after his visit, but during his visit also. And what happened was that we could see a little cooling down, because prior to that visit, Pakistan was concerned. In fact, Pakistan is directly impacted and affected by anything happening around, anything negative happening around in the Gulf countries. And we have our not only bilateral relations, but we have our trade, commerce, and all other interests. Our diaspora, the very large number, they are there. While I was ambassador in UAE, there were about 1.7 million Pakistanis that were there, and still there are same number of others increased. So Pakistan has its interest. So what happened was
Ambassador,
that the field marshal...
I want to go to your expertise in the region. I want to go to your expertise in the region and your time here in the region. And I really want to understand what you think the Gulf countries' reaction is going to be to Pakistan's mediation in this conflict and between Iran and the United States. What do you think the UAE's reaction is and will be going forward?
I must appreciate the Gulf countries and UAE in particular, because they had so much of strikes on them, and still they had shown the tolerance of highest level, the entire Gulf country and also the UAE. And as a result of this mediation, as a result of Pakistan's full efforts that Pakistani leadership, particularly the military leadership, they take the credit that they were able to really cool down that situation. If they had retaliated, the Gulf countries, the counter-retaliation would have been quite heavy. And that's what was happening day before yesterday once the field marshal was there in Iran. And Field Marshal, his whole effort was, and they say that there's a significant progress, and we can see that there is a significant progress. As a result, we saw the same day the Oman and Iran had issued a joint statement about Hormuz, the Strait of Hormuz. So that is also another positive impact, and that is the main sticking point, that the Strait of Hormuz, if that is open, and if at least the guarantees are given that the Strait of Hormuz would be open,
So what do you think the Gulf countries' reaction is going to be, Ambassador, to that temporary agreement, to temporarily reopen the Strait of Hormuz? What do you think they're going to think about it?
Well, to my assessment, the Gulf countries would have a very mild, alliance in a way that they would not collide as much as United States is expecting in terms of the financial sanction, in terms of the crippling sanction. The D-Day started yesterday. So I don't think the Gulf countries are going to go 100%. They are going to implement that. Although UAE, because of the last two strikes which had happened just about last week, UAE did impose some bilateral sanction. But UAE, I know the leadership. I have been having interaction at the all level. And I know that they are so mature and they are so wise in taking decisions. I'm sure that they would also ease out that subsequently, because the overall platform has been created by the mediators, Pakistan in particular, and the recent visit in general. And then those kind of a threat that if we have the sanction, we are going to really strike all the countries, and we are going to really engage all the interests of the United States. And we know there are about 1,500 companies of United States in UAE. And if it goes to that level, then the situation could be dangerous. But now the positive sign is that it has started cooling down, and we are having a hope that things would start moving. Russian media is reporting, and we also have been indicating that there's going to be a positive outcome out of it. Yes, please.
All right, Ambassador, we're going to have to leave it there, but thank you for your insights this morning. Of course, Jamil Khan, former Pakistani ambassador to the UAE and Libya, and now with Karachi University. Now, still ahead, Standard Chartered tells us why they think higher long-term yields in global debt markets will remain a headwind. This comes as investors prepare for Kevin Warsh's first major speech as Fed chairman at Jackson Hole. More details ahead. This is Bloomberg.
I think that the big shift that we'll see in the region, and it does all depend on what is that long-term solution to the conflict that we're living through, but a likely outcome, maybe base case, if I can say, is that some of the net foreign assets that come out of the region could be coming back into the region, recycled back into the region by the big sovereign investors to invest in infrastructure, resiliency infrastructure, think food security, defense, transportation, energy infrastructure, data center security, and so on. There's going to be, if that happens, there's going to be a lot of infrastructure investment and spend in the region.
That was BNY Executive Vice Chair Hani Kablawi discussing the potential for sovereign investors to redirect capital back into the Middle East. Now, treasuries are in focus as the drop in oil prices eases inflation concerns. And this comes as investors stand by for Fed Chair Kevin Warsh's Jackson Hole speech, seeking signals on the path of interest rates. So joining us now to discuss the Jackson Hole meeting and more is Eric Robertsen, Standard Chartered Global Head of Research and Chief Strategist. Eric, good to have you with us this morning. Just starting with Jackson Hole, what do you think the biggest challenge is going to be going into the meeting? Is it going to be inflation, growth, or market credibility?
Look, it's a good question, Abir. The first thing I would say is that the communication challenge for Kevin Warsh revolves less around the economy itself and more how the Fed is going to tell its audience about its reaction function. And what I mean by that is so far he's told us that he's going to reduce the usage of forward guidance. And what markets are waiting to hear is what are the Fed's reactions going to be to different economic scenarios. So that's the first challenge. The second is really how he responds, if at all, to the recent announcement from Treasury Secretary Bessent about buybacks in the long end. If we remember, Kevin Warsh recently was very clear that he thought bond prices were a very important signaling factor for the Fed. Bessent has just come out and said, well, I don't like the price, so I'm going to intervene and change the price. So that makes things difficult.
So, Eric, do you think that we're probably headed into a new regime where the Fed controls the front end of the yield and that fiscal policy and Treasury supply controls the long end of the yield? And what are the sort of challenges of a regime as such if we were indeed headed towards a different approach?
I think your usage of the word regime is very true and very important. And I say that because, look, we know that the Fed has a very narrow focus in terms of interest rates, right? At the end of the day, their focus is on the policy rate. Now, they have de-emphasized quantitative easing and quantitative tightening has been the latest trend. But what the Treasury has at its disposal is flexibility about where it issues debt. And that, I think, is the key question mark going forward. If Bessent is willing to buy back bonds in the back end of the curve, does it also suggest that he's going to increase debt issuance at the front end of the curve, this sort of operation twist, if you will? And I think that is the information that we're waiting to hear more information about from the Treasury.
So what are you waiting to hear more from in Jackson Hole? We've been asking that question to a lot of people, kind of like a survey. So what do you expect will happen tomorrow? Do you think we'll get a little bit more guidance, or do you think more of the same, more of the status quo?
I don't think we're going to get more guidance, right? He's been very, very clear that he's reluctant to sort of warn the bond markets and financial markets about what the Fed's plans are over a certain period of time. However, I do think he will put more color around the idea of his views and the Fed's views on inflation. Now, oil prices have come off over the last couple of days. In the short term, maybe that's good news, but I think the Fed would want to see a sustainable decline, not only in oil prices, but in overall inflation before they can really get comfortable with the idea that the Fed can sit on its hands for the rest of the year. Now, a Fed on hold is our base case for the rest of the year, but inflation remains above target. And I think the concern that the markets have is, will the Fed be forced to tighten into that higher inflation?
Eric, Ray Dalio thinks we're headed into a debt crisis that could happen as soon as over the next 3 years. Do you agree with that narrative, given where things stand now?
I'm a little reluctant to use the word crisis, but I have been warning and I have been writing about the fact that in both emerging economies and developed economies, we seem to be on a trajectory of fiscal deterioration, which obviously requires more debt issuance. Now, the additional challenge is that we've seen a surge in corporate issuance, not just from technology companies, but across, the investment grade and the high yield spectrum. And I think the combination of that increase in issuance from all participants in the borrowing market is really where the challenge comes from. Now, Is that a crisis? I don't think so, but it is certainly going to raise challenges for business models and investors.
Eric, always a pleasure to speak with you. Of course, Eric Robertsen, Standard Chartered Global Head of Research and Chief Strategist. Now, coming up, Nvidia is set to deliver its quarterly earnings report. We will unpack expectations as investors brace for updates on the state of the AI industry's massive data center expansion. This is Bloomberg. Welcome back to Horizons Middle East and Africa. The White House says it will take as many as 200,000 visas away from foreigners in what it calls the largest mass revocation in U.S. history. The move is expected to target asylum seekers who hold visas, escalating President Trump's drive to cut the number of foreign citizens living in the United States. Data show federal immigration agencies have a backlog of more than 3 million asylum cases. The sister of the late Senator Lindsey Graham has won the Republican Senate runoff in South Carolina, defeating Representative Ralph Norman. Senator Darlene Graham led 52 to 48% with about 90% of the vote reporting. This is after receiving heavy support from President Trump. She'll face Democrat Annie Andrews in November. And the Queen of Country, Dolly Parton, has died at the age of 80 in Nashville. She was a renowned songwriter and businesswoman who became one of America's most recognizable celebrities, well known for her one-liners and blonde wigs. Some of her most famous songs include Jolene and I Will Always Love You, which was also covered by Whitney Houston for The Bodyguard back in 1992. Now, before we head to the break, let's take a quick look at where equity benchmarks are sitting. S&P futures not doing much. NASDAQ 100 futures not doing much. Dow Jones also not doing anything. All major benchmarks in flat, essentially. Euro Stoxx 50 futures 0.2% higher, pointing to a positive start in the European session. And Brent crude dropping this morning, of course, as that breakthrough between Oman and Iran arrives. And coming up, it is tit for tat in the U.S.-Canada trade war. This is as the Trump administration weighs further action following Prime Minister Mark Carney's counter-tariff retaliation. More details on that story coming up next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Oil extends its slide as Iran and Oman push ahead with talks on a temporary shipping corridor through the Strait of Hormuz, easing fears of renewed disruption. The U.S. weighs fresh trade penalties against Canada after Ottawa announced dollar-for-dollar retaliation, raising the risk of an escalation tariff between the two countries. And Nvidia reports after the bill, with investors focused on whether booming AI spending can sustain its rapid growth and whether rising memory costs will start to squeeze margins. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Another look at where equity benchmarks are sitting. Well, not just equity benchmarks, other risk assets as well. S&P futures not doing much, completely flat, albeit a little bit to the downside. You know it. We've been talking about it all week. We've talked about it earlier in the show, and we'll continue talking about it. Two things we're focused on this week. Jackson Hole happening on Thursday, and then Nvidia earnings after the bell later today. We will, of course, be keeping an eye out on that, and we'll have a preview in just a little bit. And then the yield on the 10-year notes, not doing much. Again, 1 basis point higher, but way below the elevated levels we saw into yesterday's session. We're seeing them at 4.64%. And of course, Kevin Warsh, Jackson Hole, will we see forward-looking guidance? The consensus is not really, but we'll have to wait until tomorrow to be able to see what happens. Brent crude prices about 2.6% lower, falling for a straight three-day losing streak, essentially $86 on the barrel after that breakthrough agreement, temporary agreement between Iran and Oman. And then, of course, Bitcoin It is below $80,000, but 79. It's edging higher by the second. Actually, futures markets suggest more upswing to Bitcoin. So two important assets we're keeping an eye on are Bitcoin and gold. Ray Dalio said, buy about 15% oil in your portfolio and just a little bit of Bitcoin. He alludes to a debt crisis on the horizon in the United States in 3 years' time. So something to keep an eye on, of course. And then Asian equities or Asian markets, for a look at what is happening there. We've got Winnie Su standing for us again in Hong Kong. Winnie, what do you have for us this morning?
Yeah, morning, Abir. Well, we are seeing Asian stocks extending gains for a second day on the lower oil prices, given the progress that we're seeing between Iran and Oman in terms of reopening that Strait of Hormuz. Now, that is also sentiment supported by the rebound in U.S. textures overnight after Nvidia actually snapped 7 days of losses ahead of its earnings later today. Now, interestingly, I wanted to point out that in the past 4 quarters where we saw Nvidia earnings actually beating estimates, we saw shares was down about 3 to 7% in the following week. So that's also perhaps something to watch out for. But overall, we are seeing that rebound in tech shares in Asia, with some of the tech-heavy indexes here up more than 1%. Now, flip aboard also cross-asset, we just talked about gold, seeing a bit of a consolidation today after 5 days of rallying, but still over the past week up about 7% and hovering around those highest levels in 3 months. And worth pointing out how that is also supporting the gold-related stocks. We are seeing the gold miner ETF here outperforming the broader world index by the most since April. Of course, the sustainability of this is really going to be depending on what comes out at the Jackson Hole meeting later this week. Back to you, Abir.
That Ray Dalio post is starting to make sense then. Winnie, of course, thank you as always for those updates. Now back to trade wars. The U.S.-Canada trade war continues to escalate. This is as the Trump administration weighs additional trade penalties against Canada. The talks come after Canadian Prime Minister Mark Carney unveiled dollar-for-dollar retaliation to the new tariffs that were imposed by the U.S. on Saturday. Let's get more on this story by Bloomberg senior editor Balazs Pins, who joins us now from Hong Kong. Balazs, good to have you with us. It seems like we've been having headlines about this latest trade war since the weekend, really. Can you tell us a little bit more about the retaliation measures that were recently announced or just momentarily announced by Canada?
That's right, Abir. It does seem like a tit-for-tat situation. We talked about dollar-for-dollar tariffs here. What we mean by that is that the latest announcements by Canada affect about $20 billion worth of annual U.S. exports, which is the same number of Canadian exports that were affected earlier. The latest announcements concern U.S. steel, aluminum, furniture, milk, clothing, a whole range of products, including electronics and just like game consoles in that category as well. So it's a wide range of products. And what's interesting about that is that the states impacted the most are along the Midwest in the U.S., so states like Illinois, Michigan, Ohio, as well as California. A lot of these states are battleground states in the upcoming midterm election in the U.S., so that's why you can see where the U.S. is thinking about how they can respond. And one more thing worth noting about this latest announcement by Canada, Abir, is that this is a very sharp reversal in Carney's policy. When he came in originally, he actually lifted retaliatory tariffs that were put in by the Trudeau government in hopes of normalizing relations with the U.S. and starting talks. And it looked like that was working until Friday when everything broke down. And here we are now in this escalating trade war.
Yeah, definitely a shift in gears. It feels like he was kind of forced into that position. President Trump has been posting on Truth Social about this. Do we know the latest from him? Do we know what the U.S. response could include in response to what Canada has laid out?
Well, certainly the president's social media posts don't suggest that there's any de-escalation on the horizon. And our colleagues in Washington were able to report that the government in D.C. is actually thinking about ways to hit back at Canada again. And they are confident that they have many different tools at their disposal to retaliate. Those include, obviously, potentially increasing tariffs on more Canadian products again and trying to find different ways to pressure Canada. But as we just mentioned, that's a very delicate dance that they have to do, because they also have to think about the midterm election and how those U.S. states that are battleground states will be affected by any escalation in the trade war. But as we've seen from both the social media posts and from our own reporting, it does look like we might be in for more chapters in this tit-for-tat escalation.
All right, Balaj, we're going to have to leave it there. But of course, thank you as always, Bloomberg's Balaj Pens. Now, moving on to the tech story, Nvidia, which will deliver its quarterly earnings report later today. The results are being closely watched by investors who are looking to gauge the state of the AI industry's massive data center expansion. So let's get more from Bloomberg senior strategist Neil Campling. Neil, good morning. Good early morning in your time. Thank you for being with us. Can you tell us a little bit more about what you're expecting out of those earnings later today?
Yeah, good morning. I think the setup is another very strong growth quarter expected. The Street has around about 99% earnings growth year on year, 97% revenue growth, and 75% gross margin. So big expectations. It would potentially be the fastest growth quarter in over 8 quarters. So the setup is strong. However, if you look at all of the anecdotes in terms of hyperscaler capex, hyperscaler earnings, Taiwan Semiconductor, their chip manufacturers, monthly growth rates we've had throughout the year, all of the signs are a strong setup into the print. But it's going to be clearly about the guidance. It's going to be clearly about what they're seeing in terms of competitive positioning. And so the strong setup doesn't necessarily move the stock itself, as you'd mentioned earlier in the show. But it is the key ecosystem that everyone will care about in terms of what they say in terms of the demand drivers going forward, I think.
Okay, and Neil, Bloomberg reported at the top of the week that Nvidia has been warning customers about price increases, is at about 15% in some cases, to account for those surging memory chip costs. How can this impact margins, and would it have the impact immediately on the current or the last quarter's margins?
Sure. So I think as far as Nvidia is concerned themselves, it shouldn't have an impact to the margins on the quarter they're about to report, or indeed any impact on their free cash flow. Free cash flow is expected to be over $210 billion in just this quarter being reported. Significant numbers. But we're clearly looking at the rise potentially of 15% for the servers in which the Nvidia chips go into. And that's not necessarily driven by the chip pricing themselves, but actually being driven by, as you mentioned, the surge in memory prices, which some of the memory has gone up by triple digits so far this year. They're having to pass that cost on. So rather than perhaps impacting Nvidia's margins, it may impact the margins of some of their customers as we move forward, particularly into calendar 2027. But it's certainly yet another point where AI inflation is going to come through in terms of the ecosystem and the pressure points that we see for many of the AI players.
All right, the theme of 2027 then, AI inflation. Neil, thank you as always for your time and insights. Bloomberg senior strategist Neil Campling. Now, OpenAI says its new in-house chip outperformed Nvidia's current flagship processor in key tests measuring efficiency and response speed. The company plans to start using the Jalapeno branded chips later this year to support its AI models. The ChatGPT maker says customers will be able to choose between options focused on lower cost AI computing or faster performance. And coming up, the U.S. company that has signed the first and only nuclear micro-reactor partnership with the UAE. We will speak to Nano Nuclear Energy founder, chairman, and president, JU next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. U.S. micro-reactor company Nano Nuclear Energy is on the path to deploy its technology to the Middle East. This is after signing the first and only nuclear micro-reactor partnership with the UAE. The agreement aims to help the country go off-grid, power desert data centers, and decarbonize oil and gas fields. So let's speak to the company's founder, executive chairman, and president, Jay Yu. Jay, good morning. Good to have you with us, or good evening, probably your time. Let's just start with the partnership. What makes the UAE a compelling case for you to have the first partnership in the region?
Thanks for having me. The UAE is the first Arab nation to actually have a commercial nuclear power plants running. They have 4 contiguous ones operating right now, and which helps generate 5.6 gigawatts of power, which almost powers about 20% of the population in the Middle East. Our partnership with EHC Investment, they're looking to help, once again, bring that technology, which we have a leading microreactor technology in the world, our Kronos MMR, which stands for micro modular reactor. We are having a full-scale model being built at the middle of the campus of the University of Illinois, and we're looking to deploy that across the Middle East eventually.
Okay, so do you think that with this partnership that the UAE would become the regional hub for deploying those Kronos into the wider region? And then that leads me to, what are your ambitions in the wider region?
Yeah, so we look at the UAE as a staging point, but our microreactors are off-grid. The issues right now with geopolitical at the Strait of Hormuz, and that's playing a huge burden, I would say, to the world. And that puts the spotlight right back into nuclear. And with our technology, we're able to build that modularly. So that means transporting it through traditional shipping, road, rail, and we're able to scale nuclear truly because of the modular technology. And we use advanced fuel technology that essentially it can never explode. So we're looking at the next generation of nuclear technologies to actually scale across the world. And now with the big boom in AI data centers, especially with Nvidia announcing earnings today, that will put a spotlight right back on the energy crisis as well.
So do you see that as the biggest demand sort of point, data center? Is there something else in the region where you could see the most demand out of?
Yeah, I just came back from Nvidia's headquarters, and their main point and bottleneck is energy, right? AI data centers consume a massive amount of energy, and the current administration said for these big tech companies, they're asking them to bring their own power. So the bottleneck here is energy. It puts a spotlight right back on nuclear. And in the Middle East, they're looking to decarbonize this, right? The UAE is already looking to do this. Other countries are pouring in. Look at the news today with the president sending the Saudi agreement to Congress, right? They're looking to also leverage that again. So that means Saudi Arabia is looking to leverage civil nuclear power, and that puts a spotlight once again on advanced nuclear technologies, like what nano-nuclear energy is creating.
Okay, and what should we expect those reactors to be used for, Jay? And also, just how quickly can we see them up and running here in the UAE and in the wider region once, if deployed?
Yeah, we recently signed a multiple gigawatt deal with Tillman Digital Holdings, which is, they're a large infrastructure company. We're aiming towards in around 2030s up till 2040s of multiple gigawatts of deployment, and use cases, island communities, in remote habitation, right? So a lot of the Middle East is desert landscape. We're able to deploy that technology off grid and bring clean energy and consistent baseload energy to the region.
And Jay, just finally, you spoke about the geopolitics in the region as a challenge that is being posed right now. What about the climate in this part of the world? Is that something that factors in your assumptions at all?
Yeah, I think it matches perfectly because you're looking at heat that, especially during the summer days, where it could reach in the U.S. we say 140 Fahrenheit, which is pretty much you could sizzle an egg on the floor essentially, right? That doesn't prevent us from deploying our reactors. Once again, our high temperature gas reactor is very safe. We call it walk away safe technology because we use the next generation of fuel, next generation of technology that essentially can never melt.
Jay, thank you for your time and insights this morning. And speaking about that deal, of course, Jay, you founder, executive chairman, and president of Nano Nuclear Energy. Now, coming up, Zimbabwe is breaking with its past of economic instability. This is as a turnaround takes hold. More details on that story coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Zimbabwe, which was once a poster child of triple-digit inflation and currency crashes, is breaking with its past as an economic turnaround takes hold. This is according to Citigroup, who says they expect inflation to fall this year, while a cash fiscal deficit will balance after falling to minus 6.7% of GDP in 2023. So, of course, to discuss this story, I'm now joined by Bloomberg's chief Africa correspondent, Jennifer Zapazaja. Jen, talk to us about what led to this turnaround in the story.
Well, it's been still in progress, this story, really, Abir, for Zimbabwe. And as you were just noting there, we spoke to Citibank, which pointed out quite a few factors that have contributed to this over the past few years. Let's just take a look at one of them, which is the rising gold prices. Zimbabwe is a mid-tier gold producer, globally, but then also in Africa. And so the introduction of their ZiG currency, which is this gold-backed currency back in 2024, has helped stabilize their currency environment. We've also seen the country's export earnings for gold really skyrocket over the past few months. If you just take a look at the first half of 2026, export earnings jumped 69% to 3.1 billion. So gold really helping to stabilize their currency. But sticking with the currency story, we've also seen lithium really emerge as another factor to help support their foreign currency reserves, an emerging mineral for this country. So those are two factors that are very important. And also we've seen as the country and as really officials have pushed this ZiG, they've tried to at least stop printing additional money. So they're really trying to push for this to be the dominant currency in the environment. So these are a few of the factors that we were speaking to Citigroup about in particular. And probably most importantly, we should also point out that the IMF, the country is now in discussions with the IMF and actually have this 10-month program that is a part of the story, staff monitored program, excuse me. And so it's seeming like, at least from an investor perspective, there are a few green shoots that are giving more credibility and support to what is seeming like at least the early stages of a turnaround story for Zimbabwe.
And Jen, can you just walk us through what challenges may be lying ahead to that story?
Well, there's still quite a bit of caution in what I was just pointing out there. And I think if we just look at, let's take lithium, for example, we have seen lithium prices decrease slightly in this year. And so we've spoken to a few officials who say really relying on any sort of mineral is not fully stable for this type of environment. We should also take a look at what this country has been through. I mean, Zimbabwe has effectively been locked out of international capital markets since 1999. You were mentioning there in the intro, many people remember that this was an economy that was once characterized by triple-digit inflation. And so there still are reputational risks for at what point investors should feel comfortable really investing back into the economy. There's, of course, somewhat volatile gold prices. And still, we should point out, for many people who've been to Zimbabwe, it's still very much a dollarized economy. And so though we have seen the introduction of the ZiG very much encouraging more usage of this currency, it's still very much reliant on the dollar. So still quite a bit of headwinds for the country to navigate and for investors still to decide on themselves.
All right, Jen, thank you as always for monitoring these stories. Bloomberg's chief Africa correspondent, Jennifer Sapisaja. Now, before we let you go, some breaking news across the Bloomberg terminal just now. Bloomberg learns that SoftBank is in talks of about a potential $10 to $20 billion bond offering. This is to help refinance a loan for OpenAI. The offering could come as early as September, we learned, and the sale proceedings will be used to repay a $40 billion bridge loan that was secured earlier this year for its investment in the United States tech giant. And now a quick look at equity benchmarks before we head out. U.S. futures still not doing much, 1/10 lower. Euro stocks pointing a little bit higher this morning. That is it for Horizons Middle East and Africa. This is Bloomberg.